Welcome back to the BA Podcast. Your boy C-Roc here in Las Colinas at the Ritz Hotel for the February edition of Board of Advisors. I'm here with Acen Hansen again. We're going to run this thing back. We're going to learn more about him and where he's come from. Acen.
Sounds good. Looking forward to it.
Hey, man, I saw you on the pickleball court.
Yeah,
How'd that go for you?
I didn't represent so well on the pickleball court, but hopefully I'll get a little bit better at that.
Do you play
next
much?
time. No, not much at all.
Okay.
My in-laws play pretty actively, and we'll play with them, I don't know, once every other month or so.
Yeah.
Not much experience at all.
Listen, so I played with my kids, and I didn't know the rules. I thought it was just like ping pong, right? So we played with the kids. But I came down to Fort Lauderdale for an event a couple weeks ago, and there's a 60-some-year-old guy that's in my community. Shout out to Corey. Pissed off at him right now, but because he beat my ass.
Yeah.
Like we played pickleball, and I literally went all out, and he just the spin, this and that. I'm like, damn. So
there are a couple guys here who were doing that.
Well, that's
it's
what
the same thing.
I come out here, I'm like, all right, I'm warmed up now. I know how to do this. And then Barry's just ridiculous,
just crazy.
Yeah, and they're all older than us.
Yeah.
So it's like pickleball is like the great equalizer.
Yeah, it is absolutely.
So
I was saying we should do BA rugby next time, then my ego can recover a little bit.
yeah. I was like, Corey, let's play golf, man. I'll take you out on golf. But yeah, so shout out to Barry, the spinner. We call him a spinner. So let's talk about where you came from, because last time, well, actually, before we do that, like just remind everybody what you do. Yeah. And then we'll go into that.
Yeah. Legacy Integrated. We specialize in wealth management, and, really kind of asset management as well. And, I think one of the things that really sets us apart is, we do the publicly traded securities that everybody kind of knows, and we actively manage that, which I think is a little unique, but we really embrace a lot of the alternative, non-traditional, non-publicly traded stuff as well. So, you help clients get into different sorts of real estate, private equity, structured notes, things along those lines that, most of the time clients can't get on their own. Right.
Well, because it takes network and connection, right? To have access to it, because otherwise you don't know about it.
Correct. And then, there's a whole extra level of due diligence that goes on, because you can go look on Yahoo Finance and find out what Apple's PE ratio is. You can't really do that with some of these, with any of these private deals.
Right. So, so how much rigorous due diligence do you do? Like, how do you do it? How do you know what to do with a alternative investment?
Yeah. We have a whole due diligence team. That's literally all they do. They don't really interact with clients much or anything. All they're doing is just combing through different funds and evaluating, the fee structure, the market, the management team's, background and capability, and really just evaluating whether or not we think that the group and the fund and the opportunity is going to have a strong likelihood of performing like they say they will, or that they project they will.
So on the other side, you're also raising capital for people, right? Isn't that kind of what you're doing?
Sort of. We have kind of retail, high net worth investor clients who we manage their portfolios for, and we might allocate. If there's a fund looking to raise, 10, 20 million, we might put a couple million of client funds into that. But like if somebody's got a idea for a bootstrap business, and they need to do a $2 million seed round or something, that's not for us.
No. But you're raising capital for established businesses in a way.
Yeah, and established funds.
Funds. Yeah, and I had another question about that. So, how do you get deal flow, like for those alternative sources?
Yeah, there's a lot of industry conferences that our group will attend, and they'll go learn about different new funds, and kind of keep their finger on the pulse of where we think the puck is going. Last time I talked about data centers. We're still very bullish on data centers. I think we will be for a while, because this AI wave is continuing to come, and it needs a foundation to be able to do that. So these data centers is that foundation. So we're very bullish on that. But anyway, so we just go to different industry conferences to kind of make sure that we're up to speed on how things are going, and there are fund managers that are at those conferences that we'll learn about, and that'll be kind of the introduction to then start evaluating and assessing them.
So the data centers, is it the data center as a whole, or is it the real estate that the data centers rent?
It's mainly it's kind of both. It's mainly the real estate, but most of the time when they build a data center, the data center is just a gigantic
storage place for
concrete
computers.
Shed for storage for computers. Yeah. And then businesses just rent out some hard drive space on your computers essentially.
Yeah.
So if you take the computers out, there's not really a whole lot of use for that big old concrete shed.
Yeah.
So it's kind of one and the same.
That's what they do. It's like concrete sheds. It's not warehouses. I always thought data centers
but what I'm saying,
pole buildings or something. They're concrete. Like
they're concrete, big old,
Yeah, because like I learned something about data centers the other day. One of the guys that's in a group that I'm in, he has data centers, and they got to keep them cool.
Yeah,
right. It's a big deal. But he said that they have this oil that they'll submerge the computers in, and it cools the things through oil submersion.
I can't speak to that. I'm sure that's true.
Stuff,
there's a lot that goes into it.
Yeah,
for sure.
Yeah. All right, so let's go back to your story of where you came from in the first place.
Sure. Yeah. I grew up, in a little farm town in Idaho. Single mom, one sister. I spent a lot of time living with my grandparents. My mom had to work, and she went and did like a year of massage school to get licensed to be a massage therapist, and we lived with my grandparents during that time. So kind of bounced around a little bit, between the different places we lived when I was growing up with my mom and living with my grandparents. And my grandparents kind of moved around. I think I was fortunate because the statistics, kids of single mothers have a high likelihood of, drugs, crime, alcohol, jail, all that type of stuff. And I happened to fall into a pretty good friend group that, kept me out of that type of stuff. And I was very active, outside of school, meaning like I've been an athlete my whole life. So I played football, played soccer, ran track, wrestled for a year. Wasn't really my thing. So
a little tall for wrestling.
A little too tall for wrestling. And
no basketball?
Dude, football. I played rugby in college. I was a collision sport guy. Okay. So basketball was a little too gentle for my nature.
And for football, what position?
I was a tight end and I was a defensive end.
Okay.
Yeah.
Because your height helps with those things.
My height.
Sure.
Yeah.
And then no college football?
I played rugby in college.
Oh, just rugby.
Yeah.
Okay.
Yeah.
How come you didn't decide to play football with your size?
Well,
by the way, how tall are you?
I'm 6'8".
Yeah, dude. What the heck?
Yeah, and I was like 6'5" when I graduated high school. I don't know. There's probably a lot of things to it. I was a great athlete. There was some small town politics that we just didn't know how to navigate. And I didn't get a whole lot of support from my coaching staff on getting recruited.
Yeah.
And I didn't really know what I was doing, so I didn't get recruited. And I remember, when I decided to attend college at Boise State, and I called the recruiter just by myself.
Yeah. And
he was really dismissive. He's like, whatever. I was like, hey,
walk on. Yeah.
Let me have a chance to walk on. And he was dismissive. So I was like, all right, I'll just focus on school and I'll study. And then I got recruited to the rugby team when I was there. It's not a big deal.
Yeah. With club team is
we competed against other schools and ours was a club, but some of the schools we played against, they had varsity programs. They recruited their athletes who were on scholarship and stuff. So
gotcha.
It was weird because it was legit, but it was not legit.
Yeah. Rugby, dude. Football was. I played college football at Division III, and it was rough. Maybe it's because I wasn't big, but I can imagine rugby with no helmet. I had concussions. How does that even happen? How do you guys do that?
You learn how to tackle to protect your head in rugby for sure.
Yeah.
There's definitely. Rugby's the perfect sport. I love it. My first love is football. I fell in love with football, but rugby's my also first love. Yeah. I just love it so much. But
did you guys party a lot?
Because the rugby team partied a lot.
At my school, Division III, right? They had a club team, but they were just the biggest partiers. Drink keg parties all the time. And
that's one of the things that I think is pretty cool about the rugby culture. I love rugby as a sport. It's fantastic, perfect sport. But the culture is unbelievable. Yeah. Because you'll spend 80 minutes just trying to knock the head off of the guy opposite you.
And then they party together.
And then as soon as the match is over,
I thought that was so weird. I'm like, football, we hate the other team.
Yeah.
It
was really cool.
That is weird. They have a barbecue after the game.
Right, exactly.
It's what is this, beer league?
Yeah.
A softball thing? Yeah, all right. So then you go to college. And when you were going to college, did you know what you wanted to do?
I did, but it's not what I'm doing now.
What was it?
Like I said, I've been an athlete my whole life. So when I was in college, I wanted to be a strength and conditioning coach.
Okay.
Or, a personal trainer, something in the health and fitness space. And what I was really interested in was performance. And, so kind of midway through my college career, as I'm kind of, getting more specific with my classes, I learned about sports psychology, like as a field. And I was like, man, sport and performance psychology would be so cool. Like learning about leadership and flow and all that type of stuff. And that was really interesting to me. And so my senior year, I put in my applications for grad school. My top choice was the University of Edinburgh out in Scotland.
Yeah.
Got approved. It got accepted. I was going to be able to go out to school there and everything. But I also got married my senior year. And, my wife and
in
I.
High school?
No, my
college.
senior year of college.
Oh,
Yeah, my senior year of college.
yeah.
My wife and I, the place that we were going to church, kind of that congregation had quite a few guys in the financial services arena, a lot of investment advisors and things like that. And, that we'd been in there for about a year, like I said, getting prepared for grad school, kind of getting everything sorted to leave. But over the course of the year, as we're going to church, every guy in our congregation who was in the investment management space was like, you should get into this field. You'd be really good. And I was like, no. But eventually, like after you hear like 7 or 8 times, like maybe I should get into this field, right. So I started looking into it, and everything that I loved about strength and conditioning and sport and performance and everything is present in financial planning. Like at the end of the day, you've got an athlete who has an objective, or you've got a team that has a goal that they're working toward, and you build a program, with sled pushes and squats and all this type of stuff to help them be able to perform optimally to be able to achieve that goal. Well, in financial planning, you've got an individual or a family who, they've got their situation now, and they've got an objective that they're trying to reach, and you just help them build a plan to be able to, invest in the right things, make these different tax moves, and, kind of move all these different pieces to accomplish the goal that they're looking to set.
Right.
And so, like everything that interested me about sports psychology, and strength and conditioning was present within the financial services arena. Just again, instead of doing, squats and burpees, we're doing, Roth IRAs and captive insurance plans and stuff, So.
Right. So did you start working with high net worth individuals, or did you just get in and start working with anybody that needed help?
Yeah. I mean, when you first get started in the industry, like, they have you like list out 100 people, and you just try to call them and it was brutal. It was rough. But then, I had a good opportunity about a year in. This place that I started was Northwestern Mutual. They're a great life insurance company. And they kind of told me, like, you're going to be a financial planner. But I've been in there for a year, and I was still selling just life insurance. That's all I was selling. I was like, this isn't what I want to do. I don't want to be a life insurance salesman. And so I was kind of like considering, like, maybe I should go to University of Edinburgh or whatever. And I actually got reached out to by one of the guys that was in my congregation when my wife and I first got married. And he was like, hey, like, we're looking for somebody to help us kind of work with our current clients and get to the next level. So that's what ended up bringing me to Legacy. And then, I've been able to help that group grow quite a bit. And when I moved, we had a lot of kind of middle class, but a lot of kind of upper middle class clients as well. Yeah. And of course, quite a few high net worth clients also. But it was just a matter of kind of helping our clients generally, or helping our investor base generally kind of move upstream. Yeah. And now we have still a bunch of kind of middle class clients. We have probably 1,000 to 1,200 clients who are just everyday mom and pop kind of groups, and then I have a couple hundred high net worth to ultra high net worth clients as well. Gotcha.
And have you ever thought about like working with celebrities, athletes, and those people that have like, and then make that your niche? Still help other people and all that, but like say that I am this.
There's something. I've never really been like interested. I mean, obviously, if Will Smith knocked on my door and wanted to become a client, like I'm not going to say no. Yeah. But I've never really necessarily been interested in like pursuing the celebrities. But like obviously, sports has been my world for a long time. Right. And so we actually are currently working with a few NIL athletes, and we've got a couple NIL agents who have referred some of their guys over to us. Yep. And that's really fun. When we get a good kid with like a good head on his shoulders, who's got an opportunity, his room, board, housing, tuition's all paid for, and he's getting, $70 to $170 to $500,000 a year with basically no expenses. Like he's got an incredible opportunity to like really set himself up well for life.
If you're not there, they're going to blow it.
Right.
You know what I mean? Right. Because it's parties, and when you're not
Yeah.
used to that kind of money and you have no financial literacy.
That's exactly right. And that's what a few of our guys, I actually just, one of my favorite clients, I can't say his name, but one of my favorite clients, we just started working with him, but he's just a good kid, good head on his shoulders. And he's kind of told me, he's like, dude, I don't even know what I would do with this money. And so,
it's an athlete.
Yeah, it's an athlete. Yeah. And so, he's got some money with us, and we've got him on the path to really get set up to be able to have a good foundation. Hopefully he goes to the NFL and crushes it.
Yeah, well, they can be more aggressive at that age too.
Exactly.
You know what I mean?
Exactly.
So
Yeah. So, but we've got a few guys, and that's really fun. Like again, they're in a great position to be able to set themselves up well, regardless of whether or not they move on to the pros. But they're able to set themselves up well for their future. And then, if they do make it to the pros and, be able to have a decent career, we're able to really help them be set up right from the start.
Yeah.
So that, when they get the money, they've got some good tax plans in place. They've got, some good kind of asset protection in place to really be thoughtful about stewarding that money well, because they've got a great opportunity.
Yeah. Have you gotten into crypto much?
We've actually been trying to get involved and create our own crypto fund. There's a lot that goes into that. It's very difficult with regards to kind of the regulators and some of the things that, your custodians are allowed or whatever. So we're in the process of trying to get like a kind of a crypto fund launched. But for now, we have a Bitcoin and Ethereum ETF that we can get client money into as some of our actively managed publicly traded stuff. It's nothing special, but
So
it's
for the audience, what's the difference between buying Bitcoin on your own or Ethereum and an ETF? And what's the pluses and minuses?
Yeah, I mean, for all intents and purposes, essentially by you buying into an ETF, you're just buying into a pool of funds that then goes in and buys crypto after taking some management fees. So, you just have a degree of separation.
Same crypto, or is it mixed, diversified?
With like a Bitcoin ETF, it's just buying Bitcoin. With a Ethereum ETF, it's just buying Ethereum.
So why would you do that versus just buying Bitcoin yourself?
There's not necessarily a reason to do it versus buying Bitcoin yourself, other than it's like, hey, like I don't really want to go through the rigmarole of creating a Coinbase account or and a lot of these, like when I first got involved personally with cryptocurrency, I was on Bittrex. Bittrex isn't even around anymore.
Yeah,
Bittrex went bankrupt, and I lost some of my crypto because it was trapped in that that custodian. So like, there's client risk to going in. Hopefully Coinbase is around for a while, but what if Coinbase is the next Bittrex and they disappear? I don't think it's going to happen. But what if they do? Then all of a sudden, all of your assets you own in crypto
get locked up.
If you don't get them out in time, they get locked up and they're gone.
Yeah.
So, by kind of doing a Bitcoin ETF or an Ethereum ETF, theoretically, you've got a degree of separation there, and it's, with a publicly traded ETF on, an exchange that is reputable, has been around forever, that, should hopefully make that less of a risk.
I never knew what ETF stands for. I could have looked it up. What is ETF?
Exchange traded fund.
Okay.
Yeah.
Got it.
Yeah.
Got it. And are there some ETFs that are diversified, like
crypto? Most ETFs are diversified. You can buy an S&P ETF, which is just kind of exposure to the overall S&P 500.
Yep.
Now if you wanted to buy the individual stocks in the S&P 500, you're shelling out a few $1 million to be able to own individual stocks. But you could put, $100 theoretically into the SP ETF and have exposure to all of that, because you're, putting your dollars into a greater pool of dollars that is then going out and getting that exposure to
Gotcha.
that. And it can be the same for different, you can do an energy ETF, a volatility ETF, all these types of things. So
yeah. So I've always had this thought when inflation was out of control recently, right? Of course the stock market should go up because it's based on dollars.
Yeah, sure.
Right.
Absolutely.
So like we're seeing that stock market, the Dow go to close to 50, S&P 7,000. But like, is it really that big a deal? Because the dollar's not worth as much. And like,
when you say that big a deal, like in terms of like kind of the new highs and all those new benchmarks,
it's like if you look at what the inflation numbers are, I mean, the dollar's not worth as much. So of course that should be higher for that amount of company.
Sure. I do agree with that. Yes, absolutely.
But they don't ever talk about that.
They don't, and that's a deeper conversation than a 20-minute podcast.
But I mean,
for sure.
something to thought.
But
Deep
no,
Thoughts by Mike C-Roc.
No, it's certainly like something that I think in general, inflation has always been around.
Yeah,
you know what I mean.
Of course.
But like since the dawn of America, if you bet on the American economy, you're going to win.
Mm-hmm.
And that's been the case. I mean, yeah, there's certainly peaks and valleys, but there's a whole heck of a lot more peaks than there are valleys historically. And I think that's going to be the same going forward.
Yeah.
And, we are going to continue to hit new highs. And a part of that is because of inflation, but a lot of that's also just because of innovation.
Mm-hmm.
It was 200 years ago, the most valuable resource on the planet was beaver skin.
Yeah.
Yeah. And now the most valuable resource on the planet is, if you're talking like
chips.
Actual individual resource, but yeah, it's microchips, it's computer chips.
Yeah.
And it's copper and concrete warehouses, like I said, I think data centers is really like a great asset for the next little while.
Yeah. I was thinking about something else the other day that was going to just explode. Oh, you know what? I was thinking about with the Iran situation, going against the gasoline companies.
Yeah.
Like it's going to have a problem.
Yeah.
If they cut off I don't know how that works. I was just going through my head, but we attack Iran, gas prices or oil's going to drop. Oil's going to explode, isn't it? Because supply will be dropping.
Yeah, I mean,
that's what I was thinking.
It kind of depends on how that all resolves, right? The idea is, there's always a resource at stake when there's some sort of geopolitical conflict, and with Iran, that resource is oil. Yeah, so
oil supply will drop because Iran might cut off supply channels, and then the price will go up. And if you put a call in, I guess I would call it in options, right? Put a call in on it now, it goes up, you win. Is that how it works?
Yeah,
I know a little bit.
So if you short it,
but you don't want you short it when you're expecting it to drop.
When you're expecting it to drop, right.
Right.
I mean, it kind of depends on how you look at it, but the big motivation for going into Iran, and I'm sure there's other motivations, but a big motivation for going into Iran would be our ability to control that oil supply and make it more readily available. Because here's the thing, AI, crypto, all that stuff is in vogue, and it's in vogue for a reason because it can be transformative, and USA is trying to be on the cutting edge of that transformation.
Right.
And in order to be able to allow that, we've got to be able to have energy to serve that need. And in order to be able to have energy, we've got to be able to have oil to provide that energy. So, I think the price is less of a concern for the big picture, more as much as it is like the availability.
Gotcha. All right. Well, Acen, where can people go deeper with you that want to talk to you about your services and possibly?
Yeah, I'd say, come to our website, thelegacyintegrated.com. You can schedule an appointment with one of our teammates there, or there's our phone numbers there as well. You can give us a call, and we'd love to be able to help you navigate the future.
Awesome, man. Appreciate your time. Yeah. Thanks for coming on again.
Yeah, thank you.
All right, that's this episode of the BA Podcast. Keep coming back. Make sure you subscribe on the YouTube channel or your favorite podcast platform. And until next time, C-Roc signing off.